Brazil is reaching a really interesting inflection point. So before 2016, we saw 13 consecutive years of rule under the Workers' Party, which was really focusing on subsidy-led wealth redistribution. That led into pretty significant fiscal deficits, at one point 10% of GDP, and multiple years of economic contraction. Because of that, you saw the currency weaken, which translated into higher inflation, and then the central bank had to raise interest rates, and that put more pressure on growth, and that kind of created a cycle of slow and contracting economic growth in Brazil. Finally, in 2016, we saw a wave of anti-corruption under the Lava Jato campaign, and that eventually ended in the impeachment of President Dilma. So in that point, the international investment community looked at Brazil and said, we're finally seeing a change in governance from the highest levels. And we have an independent judiciary system. We have double-digit interest rates, so we can buy treasuries that are returning 14.25%. And it seems like we have a real turnaround with the government focused on improving their fiscal deficit, meaning that we'll get paid back on our debt. So with that happening, you saw a lot of outside international money coming into Brazil, supporting the real. And with that happening, the currency strengthened, inflation came down, and the central bank had the opportunity to cut interest rates. And that's going to drive growth. So since November 2016, in terms of monetary policy, the central bank cut interest rates 825 basis points. And given that Brazil has a history of hyperinflation, most companies are levered in floating rate debt. So that means as interest rates are coming down, lower net interest expenses are coming through, and we're seeing positive earnings revisions for all of these companies before you see any operational improvement. Now we have the Bolsonaro government that came in the fall of 2018, and they're driving that sort of next leg of reforms. So first we're seeing pension reform, and that's going to improve the fiscal balance even more. And the current proposal, which has passed Congress and is sitting in the Senate, is giving us 30% more savings than the market had initially expected. In addition to that, they're working on tax reform. Brazil ranks 184 out of 190 countries of countries surveyed in regards to the ease of doing taxes. And they're really just looking to simplify the system, reduce bureaucracy, and most importantly for the companies that we're looking at, reduce the effective corporate tax rate from 34 to 15%, which we see as really meaningful. Privatizations is another thing that we see going on. So the country's looking to raise 75 billion reais by privatizing a lot of their state-owned and public companies. And with that, you're not only going to get an inject of liquidity in the market, but you're also going to see an improvement of corporate governance and more alignment with minority shareholders. The country is also opening itself up to trade. After years of import substitution and industrialization, they're opening themselves up not only to Latin America, but to trade with the United States and the Eurozone. All of that, we still have a significant amount of pent-up demand. So unemployment is still at 12%. We're speaking to companies operating at 65% utilization rates. And as these other levers start to get pulled, we're going to see a significant amount of demand come through, and that's going to lead to margin expansion and positive earnings revisions, which make us very optimistic on the Brazilian market. And one thing we're not even mentioning, which is sort of the core of Brazil, is its structural story. So yes, fantastic demographics, really strong natural resources, the largest country by territory in Latin America. And as the economy minister Guedes recently said, it doesn't make sense to be the 8th largest economy in the world and still 120 something in terms of ease of doing business. So the government's very focused right now to spend the next 4 years moving up from 120 something to the top 50 countries in terms of ease of doing business. And I guess the best way of phrasing it is that Brazil's always had fantastic assets, but kind of bad management teams. And now we're going to align these really strong assets with a really strong management team that we think is going to unlock a lot of value and drive a re-rating for Brazilian assets.